Yo, what is up, family? How y'all doing today? Hope you're having a beautiful, blessed day. Today, we're going to get into a little bit of how to enter based upon price action, a little bit based upon, looking at certain ways that I trade, maybe a couple other perspective as far as, maybe a couple different, I guess you would say ways to trade, strategies. But we're definitely going to get into some price action and definitely understand on my entry points. This video will be basically just upon entry points and how I enter trades. Okay. So give me a second. So pretty much what we're going to do here is this is GBP USD. So for me, how I start off my trades, because I definitely have to start from the basis of how I trade and then get into my entry points and why I took it. So for me, I like to first look at double bottoms, double tops. Whether you want to say this is support, this is resistance, that's still the same concept. But for me, how I look at these now, rather than being an area of rejection, I look at them as a target to be able to come to take someone's stop loss. And what I mean by that is someone probably originally bought here looking for a big move up for like long-term swing traders. But being that it moved up here, they probably moved their stop loss to break even. So more than likely the market's going to want to come back to that break even. That way they're not able to gain the big capital of the move up. So same aspect on the sell. I definitely could see this as a selling point for most traders. They sold here and they probably have their stop loss now at break even. So the market might want to come back up to here in order to take that out. Now, most people would say, well, why wouldn't you want to buy at this point? Because it's so far down, that's kind of risky. And yes, I understand that. But for me, it's why would they come this far down, not to come down here? That's kind of how I view it. Now, I could be completely wrong. I'm not a financial advisor, so don't, say that, oh, you're going to be right and it has to play out, because even myself now, it doesn't always fill the areas of what I want. Even though that's my target, it may not do it. So now that that's there, I'll come down to 4 hours. So my ultimate bias is to continue down here to take out this stops. So now I'm going to look for, where the next points of closer equal tops, equal lows. So there is one here on this point. There also is an imbalance somewhat between this wick and this wick here, or these equal tops here. So this could be another area of, where market could come to. But as I move further down the time frames here, so now I'm gonna go to the 1 hour, I'm gonna look at what else there's available. Now, I did see this here. So I know last week I sold from this here and I sold from this area here. But this could be the same aspect of like how I took my, my partials, but I'm sure if I would have held it and I would have left my trade running like this, as you can see here with what happened the last 2 days, they ran into my original sell to take my stop loss or just to take my break even so that I couldn't benefit highly against it. Okay. So this is where I start to look into, okay, now they're at this point. And then I also take big consideration into sessions. So whether it's Asian London or New York session, for me, it's mainly London session I trade. So I have to look at where at London session, so it'll be 12 p.m. my time, 3 a.m. Eastern time. I have to look at where price is at and where they're going into at that point to kind of see where I can enter the trade. Now, for me, I only have really a couple of ways I enter a trade, or I look for a consistent pattern. So one's going to be 1-2 break here like this. This is going to be one of mine. The reason why is because this here, like I said, equal tops are going to be liquidity. So they purposely make liquidity in order to take the stop loss. So someone's probably going to double tops. I no longer trade double tops, double bottoms, triple tops, because there's this opportunity for them to come into. And then they'll break and then retest. Now, we'll see here. Normally, liquidity is matched by another liquidity. So this is the previous liquidity. But within this little area here, there's going to be this same pattern here, in which I'll show you. So if I go down the 15-minute, you'll see that same pattern occur. You have 1, 2, and then you have the break of liquidity, then you have the break of structure, then the retest, and then the continuation. Oops. Sorry, guys. So 1, 2, break of liquidity, break of structure, retest, and then the sell-off. So this is the same aspect of this, and this is why I trade this, because it's a very consistent pattern that I'm able to read. Now the same thing goes for a buy aspect. You'll have a W, break, break, retest, and then a move. And we can see that here within this area. 1, 2, break, break, retest. One second, guys, I don't like that how it looked. So 1, 2, or 1, 2, break of liquidity with this top, break of structure, retest, and then the move up. So this is the same thing, but on the opposite side. 1, 2, 3, 4. That's the same as this down here. And what I want to say is the easier, or not the easier necessarily, but the safer entry level is going to be at this point here, because you actually see price break structure. So the safer entry is going to be here off of the retest. For me, I like to trade the little bit riskier side also, which is going to be this move here at this top. But that's because I'm very good at identifying this, but it doesn't always play out. So trust me, if you're not willing to take that risk, don't take it. Play the safer bet. This is the better bet for people, especially that are newer, is to take this breaker structure and the retest. So that's how I kind of take trades, or my entries. Also, it has to be within a certain time frame for me. So as you see here, a second. As you can see here, where this is at up here is at 23. So 1 o'clock, or I mean, not 1 o'clock, 12 o'clock. So like I said, as soon as 12 o'clock comes, for me, to about 1:15, I'm looking to where price is at, whether it took liquidity points, whether it, broke structure, and then I'll look for my entry. So being that this here is 12 o'clock is exactly where I entered, because I had a feeling that, okay, they're going to use London session to push it the other way. Now you'll see the retest happen, the London session move to the retest of the New York session, actual opening session at 5 o'clock for me, which is 8 o'clock then on Easter's time. So that's how I kind of use this as, the reason to come back down here. I was asleep during this point, but I had already entered here. But if I was awake, I would understand that this is the break and the retest, especially being that it's New York session now, to where it's really active to continue here. Now, that's kind of how I use price points to entry. I keep it very simple. There's different ways to do it. So for an example, another way to do it is, let's say you trade DeLorean. So DeLorean is based on EMAs, and basic EMAs. I will make a video on this very soon. EMAs ultimately, if the EMAs are below price, so for example, here you see how the EMAs of the lines are below price. That means price, meaning these candles, that means it's a bullish aspect. Now, if they're below, like over here, that's the bearish aspect here. Now, this might get a little confusing. So if it does, I like to trade a little simpler, but for a lot of people, this helps because they're able to use EMAs to help out understand the direction of what they're doing. Now, as we see here, price is moving bullish, bullish, bullish into London session. And then once we come through start of London session, the first 35 minutes, we have the shift of the EMAs. Now, the EMAs are specifically depending on the EMA, it's candles printed and what aspect they are. So 5 minute, every 5 candles, or not 5 minute, 5 EMA is every 5 candles is a bearish or a bullish aspect. 13, every 13 candles, bullish or bearish, 50, 200, 800, etc. So every, candle period has a aspect of whether it's bullish or bearish, depending if price is above or below it. Now, technically, the higher the EMA, obviously, the higher number of candles. So probably the higher impact it's going to have of where it's going as far as bearish or bullish aspect. So as we see here on the 5 minute time frame, we see that the 5, the 13, and the 50 aqua all shift into a bearish aspect. And then it ends up shifting through the aqua, the gray here, which is the 200, into where over here we have the bearish aspect, but we touched the 800 to where it rejects. And then we have like this little, move back into bullishness. But ultimately, this is just the retest off of what I just explained over here on the just price action point. Okay. So you see how once it comes here, then it ultimately retests, break, retest, and then it shifts back through the EMAs to be bearish. Now, if we go to the 1 hour or the 2 hour, you'll see what they did is they shifted up, but ultimately they respect it coming into this 200 EMA because on the higher time, it's already bearish aspect. So now they use that to push it bearish again. So this is how like the EMAs, you can understand it on the same aspect and the same concept, but a different strategy. Okay. Now for me, what I look for here on the 1 hour is I'm looking for imbalance. So let me get rid of this one over here. Imbalance is just simply where the market moved with before it had a balanced price action move. So for the sell, you would have something like this, retest, break, and then you have like that. So technically from here to here, oops, that's from here to here, this is an area of imbalance, ultimately above two double tops, which is liquidity. So these two match up for me. So you see how this here on previous price, as far as the breaker structures, the retest between this singular candle here, there was an area of imbalance that wasn't filled. And that's why they came back in to retest this little area here with this wick. Okay. Also, if you want to use it as support and resistance, we can go down to like the 15-minute and then we can use support and resistance aspect. So technically this is the last support and resistance aspect because it's right here. It's a ceiling and then it breaks above it and then it breaks through. Now this being the floor to retest the previous ceiling to continue down the bearish aspect here. So it's all the same thing. It's just learning which one, benefits you and you're able to understand a little bit better. Okay. So that you can see how this goes here to respect the previous support that's now turned resistance in order to continuation. So to come back and create the imbalance, to fill the imbalance, to come back on the 5 or the, let me see which one looks the nicest. So you definitely have to cycle through some of the time frames in order to see which one looks the best. For me, it's going to probably be the 1 hour for the EMAs. They came back up. So this is why I don't necessarily trade EMAs as much. They still work, but ultimately, you kind of see, you'd have to wait for them to actually shift back through this area on the 1 hour in order to probably take it. So once you see this shift back, you'd probably take it. But for me, I kind of like the entries up here. There's nothing wrong with taking these. It's just a little bit different of a strategy. This EMAs, DeLorean has a lot of rules, but the rules definitely help you if you're willing to follow them rather than how I trade. I have my own rules. I don't necessarily my own rules, but it's more smart money concept. But it's same stuff. You just have to learn that, what to see. But yeah, so I like to enter off of the imbalances or the liquidity made, or the safer thing is, like I said, look for the break and then the retest and the sell-off. Same thing with the bullish aspect. Like over here, look for the break of the previous support or previous resistance being a ceiling turn support. So that's why you see here, if we look on the 15-minute, you'll see here between this wick here and that wick there was a small imbalance created, and that's why they brought these candles back into this imbalance to pretty much balance it, but also ends up being the previous support and resistance. So you break the retest of the support and they continue to move up. So this would have been probably the best area to buy in order to come this way for an actual a safer bet. Now if I look here to the left where this wick's at, I'll draw a line and then you guys will understand kind of what I'm talking about. So if I draw a line where this wick's at right here, you'll see over here to the left, it actually touches another area of a wick. So you see how this wick here, so you kind of see as how this wick here, are these two wicks played off of each other. So they use this wick in order to break down into price, which most people probably entered somewhere here that actually meets up with that same type of double bottom, sorry, here. So they just filled in this little bit more to take the stop loss and then move the bullish aspect. So that's a little bit more advanced, but you can kind of understand what I'm kind of getting at. So that's a little bit about price action and how I enter trades. I definitely would say that there's multiple ways to do it, but ultimately just kind of look for, you know, for me, it's going to be liquidity, but the safer bet for most people is going to be the previous break and the retest of structure. Now they couldn't continue the bullish aspect off of this, but you also want to look at candles. So you see how as we get higher into this, the candles become more shorter and less big. So they're stagnant a little bit more, meaning that more than likely the market's going to turn and move. So I do have a video on price action here in my YouTube, and it definitely goes over price action. And if you want to look at that, it's definitely help you understand this. But you have a bearish engulfing, meaning that this singular candle of 1 hour engulfed 1, 2, 3, 4, 5 previous candles of bullishness. So this is the kind of idea of direction that's changed. Same thing here. You see how you have all this move here. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 candles here that was ultimately engulfed by one bullish candle here, which shows the bullish aspect of the move. So I like to enter off of understanding that the price action, meaning the movement of the candle or the price, is there also with my support and retest, also with my smart money or liquidity imbalance areas. So that's kind of how I use price to determine this, knowing that this is a bullish move now to retest, to continue the bullish move here, probably ultimately down to where price is at now, because technically this is the last, as you can see, break, retest, and then the next break. So this could move back up here and then come to this point here where this candle's at. We could see market do one or two things. We can come back up here to continue to sell, or we can come back up here to break again and then continue the bullish aspect here. So we can do either or, just depending on what happens. But that's kind of how I use price to, definitely enter my trades. So for me, my next sell would be somewhere in here. Then my stop loss would be above the highs. And then I would look for the next, bearish move. But I could be wrong, because now this technically could be the new bullish aspect to continue to come up to this area of liquidity, which I have marked off also. So it's a possibility of both, but it's just understanding how to use, and then also the sessions, understanding where and when to get out. So like right now, I should get out of this trade, because ultimately, if it does come back up here to retest, I just lost all that profit. And it's really not that far for me to just re-enter on another one. So I hope you guys enjoyed this video. I hope it gave you a little bit of knowledge. Any comments or suggestions, please definitely drop in down in the comment section. Please subscribe, and please give it a like. Have a wonderful day.